What is going on, investors? Welcome to my channel. This is the Frugal Investor. Happy Saturday and a good morning. On Saturday mornings on this channel, I'm starting to do weekly reviews of my portfolio. What did I buy? What did I sell? How much did I buy? How much money did I put in? And what dividends did I get? All of that, we are going to cover that in this video. I on this channel am trying to be more transparent with my audience, with the people that watch me, with my subscribers, and I think I owe it to you guys as a thank you for watching my channel and keeping up with me and supporting and liking the videos, all that good stuff. I really appreciate each and every one of you who is watching my videos. With that said, let's start this weekly portfolio update. For this week, actually, we are in a negative. We are in the red. We are in the red by almost $1,500. For this week, it was a red week in the markets. Tech was the biggest loser in the markets for the week. But in the middle of the week, I was down by almost $3,000, which is close to 2% of return. Right now, it's only 0.87%, which is $1,500. It's not that bad. During the middle of the week, when the tech stocks and a lot of the other stocks were down, I did make some purchases. So as you guys can see, I made a purchase of $700 on August 17, and I purchased PayPal and Broadcom. Both of those stocks were down by a lot during the middle of the week, and that's why I made that purchase. I also purchased five companies here, which is Canadian Pacific, JP Morgan, Disney, Google, Shopify, on August 16, which is also during the middle of the week, and the market was in the red. I'm telling you, Shopify was down, Google was down, Disney was down, I think below 175, JP Morgan and Chase was down, and Canadian Pacific was down, and it's still down. Canadian Pacific is still down, it hasn't recovered. So overall, for this week, I added about $2,100, $2,153, and I made seven buys. So all good companies that were down, I basically bought them. Also, I did get dividends from AbbVie, which was about $57, which I reinvested. As you guys can see, with that, I bought Google because Google was down during the middle of the week. I also got a dividend of 20, almost $24 from Capital One Financial, which I'm going to be reinvesting, and I'm going to see which stock is in the red, and I'm going to be making a purchase on that stock. So this is my activity for this week. Overall, we made eight buys. So also I made a purchase of $18.21 for Google as well. So I bought like a lot of Google this week. So overall, we were net buyers this week because the market was in the red, and I rarely sell. I don't really sell my holdings. These are all long-term holdings, 15 years, 20 years out when I'm making purchases. So I rarely sell anything. So this week we were net buyers, and because the market was in the red, we made some purchases. We went shopping. As I say, never squander a good red day. If we look at the performance of the portfolio, so far the portfolio is up by almost 22% over the past 7 months. Currently, I'm in the plus by almost $27,000. So far, I made around $1,800 in dividends in the past 7 months. That comes out to be about $240 and $250 per month. My biggest buys in this portfolio are technology and consumer buys. Financials is one of the biggest gainers, and technology as well. But financial is like up by almost 48%, which is quite impressive. In the financial pie, I just hold JP Morgan and Capital One, which is one of my favorite holdings. I will be buying more and more and more and more of JP Morgan. Okay, I love banking sector. I think it's not getting the love it deserves. And I love JP Morgan and Chase. Fabulously managed bank, really nice, great CEO. Same with Capital One. Mr. Richard Fairbanks is the CEO. I personally met him, and It's a really great bank, Capital One. I mean, the things they're doing with technology, they are spearheading everything. And so it's a local bank out here in Virginia, and so I'm buying both these businesses. Really great banks, really well managed. Financials is the best sector. I bought it at a time when it was really beaten down. I mean, nobody was showing it any love, and that's when I made my positions in it, and it was a great entry point. So far, it's up by almost 48%, and I will keep buying it. And the second biggest gainer in my portfolio is real estate. Real estate, I hold Equinix, which is a data center, and Realty Income Corp. Equinix is up by almost 24%, and Realty Income is up by 21%. And that is also because of the timing that I entered in these positions. It was right around September, November, when the market was still recovering. It was not fully recovered. All these plays, data, retail, I mean, real estate companies and banking companies, they were still a lot in the red, and that's when I made my entry position. That's when I made my entry in these positions. So Equinix is very well diversified across different countries, and I really like the data center business because I think they have a lot of room to grow. And Equinix is going to be one of the biggest players in the game, if not the biggest player. And Realty Income Corp is mostly just a monthly dividend payer, and it's a very safe play. The third biggest gainer in this portfolio is, of course, technology. In technology, I hold Google, which is one of my biggest positions, followed by Apple, followed by Facebook. Now, these three are hands down like one of my favorite companies to buy. Facebook, I'm up by almost 26%, and my entry point was around $292. I wish I could have gotten in earlier, but hey, so $292 is when I got in. Currently, it's trading at around $359, and it's trending on that upwards trend. And I think it will go up. I think Facebook is currently undervalued. To be honest, I think it will touch 420, 430 within this year. I won't be surprised if it does that. Followed by Etsy is also one of my big holdings in this sector. Etsy, I think, is an e-commerce play, and e-commerce market is still growing really, really fast, especially in the developed countries and the developing countries. And Etsy is in 7 countries right now. It's in also in India, China. It's going in China. I don't think it's in China yet, but it's in India, it's in Germany, it's in France, it's in USA, it's in Canada, followed by one more country I don't remember on the top of my head, but it'll continue to do great. CEO is Josh Silverman, great guy, very well managed company. So I am long Etsy and I will hold it for the next 10 to 15 years because I see only great things coming for this company. Tesla, of course, Elon Musk, Tesla, I am not selling out of Tesla for the next 15 years, man. I have so much hopes for Tesla. I think this company is not even started yet. PayPal is the leader in its space. It's one of the biggest players in the fintech game, and it's spearheading basically the game, and they're coming out with new technologies, new innovations, and it's the leader in the space. So that's why I am very bullish on PayPal. Actually, in the long term, I think this space is just started. It's not even touched the surface of what's possible in the world of fintech and peer-to-peer currency transfers and stuff like that. I think PayPal will win in the long term, very, very big. Currently, I'm up by almost 27% in this stock. My entry point was $236, and it's currently trading at $272, almost $273. So a really, really great company, PayPal, followed by Broadcom. Broadcom is more of like an international company, so I think it's based in Singapore. And Broadcom is so sort of a semiconductor play. This is one of the most well-established semiconductor companies that I could find, in my opinion. And it was expensive a little bit, but it's a high growing stock, and that's what I loved about it. Also, they pay out a great dividend, so that is a cream on the top. And I love Broadcom. My entry point was $432. I wish I could have gotten in earlier, but I got in at this point, and so far it's at it's trading at 475 right now, and I think it'll continue to do better. So that is my position with Broadcom. I recently bought more Broadcom this week, actually, followed by Shopify. Now, Shopify is one of the more speculative plays, so to say, because it is trading at such a high P by E ratio. I think the current P by E ratio in Shopify is about 300. So it's trading at such a high multiple. So it's more of a speculative play, if you want to say, for the long term. But it's empowering entrepreneurs in such a way that it's just amazing. I mean, if you think about it, anybody can open a store, a shop, and start their own business. It's empowering the younger generation entrepreneurs in such a way that it's just the business model is fantastic, and that's what I love about it. Even if the company goes down and loses all its value, if the stock goes down to zero, I would not feel hurt because I'm investing in entrepreneurs. I'm investing in, a company that is empowering people, a company that is promoting capitalism at basically the lower rungs of society, so to say, people that are more younger and that are still coming up and stuff like that. So that's what I love about this company, Shopify. And I'm very bullish on it. In the long term, I think it'll continue to do really, really great. And they have been increasing their revenues. Now they're in the billions, and they're profitable now, finally. And yeah, it's one of my long-term holds. So far, I'm up by almost 50%. I think this is one of my best performing stocks, if not the best performing stock in this portfolio. Even though when I was buying it, a lot of people were mentioning that, hey, this company is overpriced. This company is trading at such a high multiple. It's going to fall. It's not going to go any higher. And my goodness, this Shopify has continued to shock me. Okay, my entry point was $1,081, and currently it's at $1,450. The only regret I have is why didn't I buy more? Okay, and I bought more this week. I made my entry into Shopify, and I'll be buying more down the line. I don't think I'll ever stop buying Shopify. I don't care about the multiple. I don't think I'll ever stop buying it. Moving on to the next sector is consumer. Within consumer, I have Target, Disney, PepsiCo, and Home Depot. I'm very, very bullish on all four of these companies. Actually, I'm very bullish on Target and Disney. PepsiCo and Home Depot is more of like a safe dividend play for me. Disney, I'm very bullish. In the long term, Disney will win. They're just coming out with Disney Plus. There's 116 million subscribers, guys. I mean, they're jabbing left and right. Netflix is like reaching its cap, but Disney is just getting started. So I'm very bullish on Disney in the long term. I think the CEO, Bob Chapek and Rob Iger, they did a fabulous job in the pandemic when their parks were closed down and everybody was like, oh, Disney's doomed, Disney's done. No, they fought back. Amazing, amazing people. And I salute to people like that. And I'm very bullish on Disney in the long term. Target is up by almost 56%, man. Target is up by 56%. Okay, I bought it at a really good time, actually. My entry point was $185 and currently it's trading at $253. Okay, this is a fabulous thing that they are doing, Target, and they are coming out with things online now. They have done such a good job in building up their online presence, competing online. And Target, they see, the thing about Target is they have a customer niche of their own. You cannot replace that. Amazon cannot replace that. Okay, people just like to go to Target and just buy stuff over there. The Target customer is a special customer. It's not everybody. There's a special type of customer that just likes to go and shop in Target whenever they're free, whenever they're not doing anything. Oh, let's go to Target. That is what I love about this business. I've been noticing it, and I made up my mind in November. In actually, I bought it later in November, and I made up my mind. Okay, I'm going to buy this business. Yeah, that is what I liked about it. ETFs, I currently hold JEPI. So far, I'm up by almost 15%, and VYM. Both of these are high dividend paying. JEPI pays out dividend actually monthly, and currently the dividend yield is 7.27%. Okay, amazing, amazing. I love that. And VYM is also a high dividend paying ETF. Currently, the dividend yield is 2.71%. Two of my most favorite ETFs, and those what I hold. Moving on to healthcare, I hold Johnson and Johnson and AbbVie. Johnson and Johnson is one of my favorite companies, one of my safest plays out there. And my entry point was $162. Currently, it's $179. Fabulously managed business, so well diversified across different countries, different continents. Really safe play. AbbVie is also a very safe play. Now, there are things with AbbVie, with like patents and with like drugs expiring and things like that. So you do have to keep that in mind, and you do have to keep an eye on it. But it pays a really good dividend. Share price. My entry point was $107, and currently it's at $118. So it's also a long-term play, and it's a more of a dividend play. It pays out a great dividend. Moving on to industries. In industries, I hold Canadian Pacific and 3M. Canadian Pacific, as I said in the beginning of the video, we are down. So I will be buying more of Canadian Pacific because it's in the red. And 3M is a very safe play. You're never too far from a 3M product. So 3M is also a very safe dividend play. And I'm not really looking for growth in these two specifically, but I'm looking for the dividend and I'm looking for stability. If we move to utilities, I have Duke Energy, and that's the only company I have now. Duke Energy is in a lot of debt. They have a lot of debt, and that's what I've been keeping an eye on. And my entry point was $97, and currently it's at $107. So this is also a stable, safe dividend play. Basically, just there to provide me dividend if if something goes down, economy goes down, or whatever. It's just a very safe dividend play. Moving on to telecom, I have Comcast. Now, Comcast is a company that I love. Okay, CNBC, I watch it a lot. I love CNBC. Okay, it's a very great channel, great hosts, and they try their best to be in the center. And they give out great news and great stuff like that. So that's what I love about it. Also, my entry point was $55, and currently it's at $59, and they pay out a great dividend as well. So they have some debt and they have less cash on hand. But in this low interest rate environment, that's not too bad of a situation. But in the long term, I would see them get rid of some of the debt and have more cash on hand. So that is, and it's also a family managed business. Okay, the father was there. Now his son is managing it, and his the grandfather that who started it, his grandsons are also involved in the business. That's what I like to see. Family managed businesses one of the best things that you can find out there, guys, because they got so much passion in that business and they got so much so much things to prove. They got so much to protect and conserve. So that's what I love about this business actually. Comcast. So these are all my holdings, and this is an update on my portfolio, guys. And so far this week, mostly it's been in the red. I'm in red by almost 0.87%. Uh, Yesterday, Friday alone, I was up by almost 1500%, but we didn't miss out on the opportunities. We made some buys. We made about 7 buys of all the companies that were in the red. All great, solid companies. There are some companies that are on my watch list, like Amazon. Amazon is down right now, and I'm thinking about adding it to the portfolio while it's down. There are a couple of other companies too that I'm keeping an eye on, which I'll disclose in the next portfolio update next Saturday. Every Saturday I do portfolio updates like this. Please like and subscribe. Like and subscribe to the channel. Okay. Thank you for watching. This is the Frugal Investor signing out.